Our special guest today to talk about the future of the equity markets, how you should position your portfolio and what the general trend is in terms of flows and key triggers. Jyoti Vaswani is the Chief Investment Officer at Future Generali India Life Insurance, and she's with us in our studios. Good afternoon and thank you so much for joining in. Let's talk a little bit about the markets. You know, everyone said beware of the Ides of March when it came to the previous month, and volatile it sure was, Jyoti. What is the stance that you have on the equity markets going forward? Is it going to be a time where we're going to see a lot of consolidation or deep gashes with an undertone that's fairly negative?
So last year we had a one-way bull market and we saw the markets giving a return of around 28-29%. This year I think the market is going to be volatile, and we've seen that in the last few months as well. It is more coming from global cues, a lot of uncertainty as to what is happening on the, what is happening on the trade tariff side, what's happening on the monetary tightening side. So there's a lot of global cues which have caused that volatility. Having said that, I think last year we had very good macros, and what was actually the earnings growth which was eluding. This year I think we have the earnings growth which is coming back, and we expect to see a 19-20% growth in earnings in the next financial year, based on which the valuations today stand at around 18 times, and which is not very expensive. So it's not expensive at all. So that, considering that the growth is going to be 20% odd and the PE multiple is around 18 times, you have a PEG of less than 1, which makes it an attractive market for the medium to long term. So I think while in the next 6 to 9 months you could have some choppiness in the markets because of global cues, as well as the fact that we have the major elections coming up in the major 4 states at the end of the year or beginning early next year, and plus the general elections next year, it's going to be a very volatile market until then.
Jyoti, I'd like your opinion as a professional money manager on 2 stocks where institutional representation or holding is quite high. Perhaps your portfolios may also have exposure to them. But what I want to understand is that we have not really seen the kind of price erosion or value destruction in index stocks like ICICI Bank and of course Tata Motors have actually done in the last say 52 weeks or close to about 1.5–2 years now. What are the issues which are ailing these 2 stocks? We all know the recent ones for ICICI Bank, but in terms of structural core business, and do you think that at some point in time names like these will start offering value once again?
So while I will not be able to comment on stock specifics, I think the banking industry per se has been plagued with the NPA issue, and that's been plaguing both the private sector and the public sector banks. So clearly that is one of the major reasons why the stocks have underperformed. As far as the auto segment is concerned, the auto segment in India has done reasonably well, but probably in the Europe the performance has not been up to the mark for various reasons, and that's perhaps one of the reasons why some of the auto stocks have not done as well. But I think the kind of correction that has happened in these stocks are now beginning to look attractive, and probably from a long-term perspective they do offer value.
Okay, also last couple of weeks, one big theme which is being discussed in the market is the rural theme. It's a very large theme overall, overarching, because there is consumers there are rural centric lenders, there are tractor companies, seed companies and fertilizer companies. So almost 150 company universe is what comprises of the rural theme. What are your thoughts on how potent is this theme? What is the kind of longevity it has, and what would your picks be, or the themes which you would choose if one has to play that theme?
So if you look at it, 1 year ago, it was an urban consumption theme which was playing out, and the rural piece was missing. But from the last two years, monsoons have been good, and therefore you started to see some recovery in the rural consumption last year, which will continue this year. There is a lot of focus of the government on rural infrastructure in the budget. There is a focus of the government on doubling farm incomes in the next couple of years, and that augurs well. There is a focus on probably the MSPs would be raised this June. For the Kharif crop, and therefore I think that itself would also provide a good boost to the rural incomes. So clearly we are very bullish on the rural theme, and we believe that consumption story is going to continue to do well because of the rural theme that is playing out, and we like sectors like auto, we like sectors like FMCG and private banking, which are a play on the consumption theme.
Another sector that I believe, Jyoti, you are bullish on is the overall infrastructure bet. With the kind of spending push that we've seen from the government, the kind of importance and thrust to the sector as a whole, can you categorize for us which kind of companies within the infrastructure space you'd be bullish on, and what would you look at in terms of a business model for these companies?
So the infrastructure spent by the government has been quite robust in the last couple of years. This year, if you just saw the recent news that came in, NHAI has awarded 7,400 kilometers of roads for the financial year last year, and I think that was a record in the last 7-8 years. We are seeing a lot of pickup in the order book of some of the private sector companies. The EPC companies are now having good order books, because of the growth in infrastructure. So we are particularly liking the space in, say, defense infrastructure. We like transmission and distribution companies. We like the plays on metros. We like the plays on roads. If you look at the way infrastructure is getting financed, the metros are getting financed by international agencies. Like if you look at the Bombay Metro and you look at the Trans Harbour Link, they're being financed by Japanese international financing agencies. So I think that the infrastructure financing is also looking at other than the government spending. This is another way where the infrastructure funding is coming in, and I think infrastructure as a space will drive growth going forward.
Okay, let's also talk a little bit about a space that would be somewhat fairly contingent on what the government spends, and that would be capital goods as well. And you have seen a pretty strong finish in the order inflows for some of the key capital goods companies. What is the sense that you're getting when it comes to the orders for some of the large cap plays within the capital goods space? And do you think that this is a sweet spot now?
Yeah, so as I just mentioned, I think there's a lot of thrust on infrastructure, and considering that we also have elections coming up, there would be more spend from governments, both state governments as well as the central government. So there'll be a lot of projects which will take off, and there'll be a lot of thrust on infrastructure per se. So we expect even the cap good companies to benefit from this and have good order books.
All right, stay with us, Jyoti. We want to chat with you a lot more about the markets, but I'm just going to take a bit of a detour and address some exclusive news coming in the banking space, and the Enforcement Directorate probing the 13,000 crore rupee PNB scam, which involves Nirav Modi and Mehul Choksi, may soon be seeking clarity from the Reserve Bank on the non-compliance of the SWIFT norms at the fraud-hit PSU Bank. Vijay Iyer, my colleague, has more details. Vijay, what exactly has prompted the ED to seek clarity from the banking regulator, and when is the agency likely to file a charge sheet in the case?
Awan, as you're rightly pointing off, two aspects in this story. One, on the whole issue of seeking certain clarification from RBI as a banking regulator. What sources in Enforcement Directorate are saying, when RBI indeed had issued a notice to PNB back in 2016 that the system needs to be enhanced, SWIFT as a technology for interbank transfers when it comes involving foreign currencies in offshore markets needs to be linked with the core banking. Now, when this notice was issued, had RBI followed up after that? Why had RBI not taken any action or initiated any action against PNB? Could an intervention from RBI at the right time prevented this whole issue of fake LOUs to the tune of 13,000 crores, which is now turned into NPA? These are certain issues which would be discussed by the Enforcement Directorate, and certain clarifications will be sought from RBI, because ED is in the final stages of zeroing in on the whole of money trail in this PNB fraud to the tune of 13,000 crore involving Nirav Modi and Mehul Choksi, and there are all indications that in the next 30 to 45 days the first charge sheet in this case will be filed in the PMLA court. Now, why this charge sheet would be important is they are also hoping now, with the finance bill getting passed, a new norm for fugitives to be notified. Once that happens, the whole of process to be expedited for the auction would be underway, and this perhaps would be the first case where under the new fugitives bill, auction of the people declared as fugitives could be done. So that is another hope, that ED hope the whole process could be expedited. And quickly I should also add that the whole immovable property to the tune of 4,500 to 5,000 crores has already been completed, and the final valuations of the diamonds seized during the raid from Gitanjali as well as Nirav Modi showrooms would be there with them in the next 1 week. So cumulatively close to 7,000 crores worth of assets would be ready for auctions. So clearly ED is working on a tight timeline, all indication that in a month's time the charge sheet would be filed. In the meanwhile, they would also seek these clarification from RBI to try and understand was there a slippage from RBI in that front in pulling up PNB even after issuing a notice back in 2016.
Right. All right. Vijay, we'll let you go on that one. Thank you very much for bringing that story to us. In fact, let me take a reaction from Jyoti on that story, which my colleague Vijay was bringing up, not particularly on the story or stock, but on PSUs as a space. Jyoti, if one were to only look at it from the valuation standpoint and from the standpoint of robustness of business or books compared to the entire sector, are there some names which stand out in terms of can we take all in the entire PSU bank space with the same brush, or there are areas which are relatively better off than others?
So I think the PSUs at the beginning of the year, we actually thought that the worst for the PSUs might be behind us, because we had the recap bonds which were coming in, and you had the NPAs which were being recognized. You had even the 10-year GSEC yield which had gone up significantly. So treasury losses in the last quarter was also taken care of. But things changed dramatically because of the scam that came in, because of the RBI circular in February, which said that you had to recognize NPAs much faster, and also because the 10-year yields also moved up significantly, though now they have corrected, and so that's given some respite. But I think overall the PSU space has been struggling, and it has impacted all PSU banks. Having said which, within PSU space also there are good banks, and there are which are relatively better, and there are some which have actually probably not done as well. So there would clearly be some standouts even in the PSU space, and we are going with those companies, those banks which are relatively better as far as the asset quality is concerned and as far as their balance sheets are concerned.
Right. Right. Thanks very much for that, Jyoti. Time to get in a technical check in the market and some trading ideas as well.